people? What up, my people? Good morning. Yeah, today we are back on this episode whereby I'll be sharing with you guys how to use time frames. How to use time frames to maximize profit. Some of you don't even know how to use your time frame properly. You don't know how to use your time frame properly. You don't know what the time frame stands for. So now I'm going to start from the monthly. I'm going to explain it in details for you guys. Now this is how the monthly time frame is. You guys can see it properly, right? Okay. After now, you've seen the market structure, and you guys know that when we have higher high, higher low, something like this, higher high, higher low, higher high, higher low, higher high, and I think the market wants to give us an equal low. But when you have something like this, you know it's a bullish trend, right? So this is the monthly time frame. You want to come and see the market structure. Now we have this perception about the market that it is bullish. Now you scale down to the weekly time frame. On those weekly time frame, what do you want to do? You want to mark out the key levels. You come and mark out key levels. You draw a trend line. Look at my key levels here. Look at my trend line. To know what you want to trade, the direction where you want to trade. That is what the trend line is for. That is what you do on the weekly time frame. Then you come down to the daily time frame. On this daily time frame is where you analyze the chart. You can see it gets smaller. As we come down to the time frame, it gets more smaller. You guys can see, right? This is the daily. Now, after the daily, what do we want to do? We want to scale down to the 4-hour time frame. Yes, very, very important to scale down to the 4-hour time frame. Some big traders, some position traders use the daily time frame to analyze and use the 4-hour to enter. But they have like sum of money. So for like you and I, that we still, we're still pushing the market with our little $500, $100, $400. So I think you still have to scale down to the 4 hours. But one thing you want to know on this daily is you've seen what the market is doing here, right? You guys see I've already analyzed this. You've seen what the market is doing here. What do you want to do? You don't know where to enter. You don't know where to enter this market. So you have to scale down to the 4-hour time frame. But before you scale down to the 4-hour time frame, don't forget the market currently is at a trend line and at a zone. So there is no market you want to take there, because that is where market manipulations happens. So what do you want to do? You want to scale down to the 4-hour time frame. And sorry guys, I want to explain something to you. Now this is a key level. Why do we call it a key level? Market has reacted to its first 1, 2, 3. So it's a key level. Okay, so what's happening now? What's happening is on the daily time frame we are having a current trend. This is a current trend. And the current trend says bullish. It says the market is bullish. This is a current trend. You understand? Don't do a mistake. This trend line is an overall trend of the market. And this current trend can also break. It can also start selling. So that is why even on a bearish trend and the current trend is bullish, you really need to be careful. Some traders will advise you not to trade at all, but you really need to be careful. So scaling down to the 4-hour time frame, here's where you come and see what's happening. Okay. It's scaling down to the 4-hour time frame. Let's draw this trend line properly. From a weak rejection to a weak rejection, that is how you draw a trend line. I think I'm sharing much information. My students won't be angry. Anyway, I just want you guys to know this, because 2026 we all have to come out and show the world the power of forex. So this is the 4 hour time frame. All right, now you guys can see the market has been reacting to this level. It has been reacting to this level. So what you want to do is you want to check the 1 hour time frame. And when you check the 1 hour time frame, then we see there's no entry. The 1 hour time frame also, it has to like translate what you see in the 4 hour time frame to a very simple level. Then when you come down to the 15-minute time frame, I like to use 15 minutes or 5 minutes. You can be able to enter. You shouldn't come down to the 15-minute time frame if you have not analyzed. If the market has not met the criteria of your entry, you don't need to come down to the 1 hour time frame or 15-minute time frame. Coming down to the 15-minute time frame will make you take unnecessary trades. And do you know what unnecessary trades does? It blows accounts. You lost your account, you lost money. So guys, if you like this video and you want more of this content, subscribe to this channel, like, share. I will drop a Telegram link so you guys can click on the link to direct you to this Telegram wonderful channel where we drop free signals, we're for mentorship, and we'll do account management for investors who are ready to invest their money in forex and they don't know how to go about it. And it's just with a little funds. And currently we are capable of trading $100,000, $200,000, and $500,000 account. That is the maximum. So the minimum account we trade, at least for now, don't worry, come into our inbox and you will know more about us. Thank you. Merry Xmas in advance. Bye.